Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is February 21 and we're starting from GBP USD as usual with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.2027 occurred when the MACD line was just starting to move below zero, which was a pretty good signal to sell. However, the decline was only brief as the market lacked the volatility to make strong movements. Pound-dollar pair remained in a sideways trend as the Rightmove Housing Price Index report missed the market. There will be PMI reports for the UK today, in which poor figures will prompt another decline in the pound. Data on industrial orders, meanwhile, will be ignored. In the afternoon, a similar PMI report is expected for the US, but the figures are unlikely to be as strong as in the UK. Signals of weakening activity will certainly hurt dollar, which will allow pound to rally. A strong reading, on the other hand, will lead to a sharp decline in GBP USD during the US session. For long positions, buy pound when the quote reached 1.2051. And take profit at the price of 1.2093. Growth will be possible if PMI data in the UK exceeds expectations. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can be bought at 1.2013. But the MACD line should be in the oversold area, as only by that will the market reverse to 1.2051 and 1.2093. For short positions, sell pound when the quote reaches 1.2013. And take profit at the price of 1.1966. Pressure will return if economic data in the UK are weaker than expected. However, when selling, make sure that the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2051, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.2013 and 1.1966. How to trade EUR USD, describes Sebastian Seliger. The euro-dollar pair has broken below the technical support seen at the level of 1.0656 and made a new swing low seen at 1.0613. The market is in the progress of the correction cycle, so it still trades below the 50 and 100 periods moving average on H4 timeframe chart. When the corrective cycle is done, the next target for bears is the technical support located at 1.0483. The local high during the bounce was made at the level of 1.0705. So the bounce was very shallow overall, and it looks like the bears will strike soon. The momentum remains weak and negative, so all bounces are being used by bears to sell the euro for a better price. Please keep an eye on the level of 1.0787 because this is the key short-term technical resistance. Gold, sweet gold. The trading plan for this commodity asset is presented by Dimitris Tsoupas. Early in the European session, gold is trading around 1841.25, above the 21 SMA, and just below the top of the downtrend channel, which has been underway since February 2. Gold has been consolidating below the 3.8 Murray yesterday. There was no volatility or any compelling moves because US markets were closed for the President's Day holiday. On Friday of last week, gold managed to bounce from the area of 1818. This level coincided with the bottom of the downtrend channel. Since then, the instrument has been trading in anticipation of fundamental data that could give it another bullish push and continue rising until it reached the 200 EMA located at 1865 and up to 48 Murray at 1875. In case gold breaks the downtrend channel sharply, we could expect it to carry out a new bullish sequence, and it could reach 1875, and could even reach the psychological level of 1900. The pivot point for today is located at 1830. The price of gold is located above the 21 SMA. In case it consolidates above this level, there's a probability that it can continue to rise and offer an opportunity to buy. Alternatively, in case gold falls below 1830, it could be a signal to sell with targets at 1870 and 2.8 Murray located at 1812. The Eagle indicator has been testing a strong resistance. If the price fails to break above, we could expect a lower volume, and it will be seen as a sell signal. Our trading plan for the next few hours is to buy if there is a sharp break above 1847 or sell below 1835. How to trade downside movement from resistance zone on AUD-USD pair. Listen to Petar Jakimowicz, he's got a plan. AUD-USD has been trading downside this morning, and we found rejection of the key short-term resistance zone at 0.6920. Due to the downside trend condition and rejection of the resistance zone in the background, Petar sees potential for the downside continuation. Downside objective is set at 0.6814. MACD oscillator is showing fresh downside reading, which is good sign that sellers are in control. Key resistance zone is set at 0.6920. The next in line is Lowry Bailey with USD GPY pair forecast. Let's have a look. USD GPY spent another day at the support line at the global price channel 133.90, probably to continue the rise towards the target of 137.65. The Marlin oscillator is not pointing to a reversal, which is a sign of a future slow rise in price. This may be due to the February manufacturing PMI for Japan that came out this morning and showed a decline from 48.9 to 47.4. On the 4-hour chart, the Marlin oscillator is turning up slowly. But a better sign of growth is a reversal of the oscillator from zero. If it happens, yen will move towards the target level of 137.65. That's all for today. See you online soon. Good luck.